Hello, and welcome to the Banker's View from Sibos video series, looking at all the hot topics here in Toronto. I'm Joy Macknight, Deputy Editor at The Banker, and I'm here with Natalie Blyth, who's Global Head of Trade Finance, Global Commercial Banking at HSBC. Natalie, thanks so much for joining us today. I know you're speaking on a panel which is really around creating a new blueprint for trade and supply chain. What will be your main points?
My main points really come around because I think there needs to be a collective global rethink on the trade finance architecture. And I'm going to look at it through the why, the how, the what have we done already, and what are the catalysts for future growth. And if we just focus on the why we need this rethink and to change the architecture, the first one would be that the environment we all operate in today and the costs of getting it wrong being so punitive, and actually the costs of getting it right being so dramatically different to before, and the implications that has had on the industry. The second reason would be that we have seen since the early 80s a phenomenal growth in both trade values and volumes, and trade finance is driven by values, and it's been driven by NAFTA, WTO, China. We saw the financial crisis where they came down, but not for long, and popped back up again. We still see volumes growing, but values have completely collapsed. So we're in a completely different environment for trade finance at the moment, and the banks for the last 2 years have been under huge pressure. Then the third reason is quite simply that the way trade is executed today, what we buy, where we buy it, how we buy it, has completely changed. If you think about the internet, if you think about services, potential for 3D printing, and so on. So that's the why.
Okay, so what about the how?
So I think the how falls into 4 buckets in my mind. There's standardizing, which is first. And I like to sort of look at the last 100 years of trade and what's been the main innovation that we have seen, and it has been one of standardizing. And it's quite simply the container that goes on container ships and the impact that had. It speeded up trade loading 17 times. It reduced the loading of costs 98%. It reduced insurance premiums. It reduced by half the capital that was acquired on the inventory. That has been the single one innovation that has taken place. Since then, hardly anything's been standardized. But if you just go to a port now, you can see all those containers that didn't exist before. Very simple, very obvious. And I think in the future, we'll look at distributed ledger technology, and that could be, in hindsight, so simple, so obvious. So that's standardizing. Then I think we need to eliminate. So we still have lots of processes that are really inefficient, and we're working every day to remove them. Thirdly would be to automate and digitize, which is when it starts to get quite cool. We have 100 million pieces of paper, 4,000 people looking at each document, 4 pairs of eyes. It's a requirement now. We have to take the human component out of that from a risk perspective. So digitizing, dematerializing that unstructured paper we're on a journey there, and lots of initiatives underway to do that. And then the final step in this journey will be getting that digitized data onto distributed ledger technology. So I see it as a journey.
Okay, there is a ton of buzz around blockchain. Yeah,
Yes.
So how do you, and you've mentioned it there in a few places, but how will it really transform trade finance?
So I think the buzz is still around, and last year I remember my first Sibos was right up there. Every room was packed if we were talking about distributed ledger technology. And since then it's been proof of concept, proof of concept, proof of concept. Don't know about you, Joy, but I am fed up of proof of concepts. We have to get to the stage where we are demonstrating live transactions and at scale. And I'm pretty confident that we will be seeing live transactions in the next 6 months. I think really getting it to scale is going to take longer. And if we start talking about the whole ecosystem on traditional trade where you've got multiple parties involved, that's going to be years. So I don't want people to sort of go away thinking this is just going to be a quick fix. And actually the container took years to adopt. The idea was there. These things always take a lot longer. There are shorter chains that could adapt and use distributed ledger technology faster.
Okay. I also wanted to touch on the sort of the gap that's been identified in trade finance. So it's $1.5 trillion gap. What role can trade finance as an asset class play in that? But also, what are the challenges to that happening?
It's a fantastic question, and one I was discussing in Washington a couple of days ago. So you have the demand from the corporates, largely SMEs, who have this 1.5 trillion gap. They have 70% of their requests for trade finance rejected. The banks are in the middle, they are the suppliers. And yet there's another link in the chain where there's another demand, which is a crying out demand to put a lot of money to work who want to invest. This is non-banks who want to invest in trade finance asset because as an asset class it's beautiful. And yet that demand is not yet connected. So if you can connect those demand, supply, demand, I think that we can help put infinite capacity into the trade finance market. And I'm very excited about that.
Thank you so much for your insights, Natalie.
My pleasure. Enjoy the rest of your Sibos.
Thank you.